Yeah, look, I want to stress this wasn't a huge percentage of my portfolio. And generally speaking, people should play the positive drift in the marketplace. But look, this is a short term trade. In the long term, I'm a big fan of EVs. I'm even a big fan of Rivian. And I think there's a lot of reasons to get excited. You got big backers like Ford and Amazon. You got Dan Ives, who said, and I agree with this, Tesla crossing $1 trillion in valuation changes the landscape, the total landscape of valuation in the EV space. 100,000 vehicles by Amazon. That's exciting. 55,000 orders, fully refundable orders, by the way, in the backlog. That's exciting. They're going after a market that Tesla has not been able to capture. You know, the most popular vehicles in the United States are trucks. All of that's exciting. And you throw in the fact you got a $1.2 trillion infrastructure bill with $7.5 billion going towards charging infrastructure. That's terrific. On the same time, every esteemed analyst following the EV space is scratching their head with respect to valuations. And these aren't people that got EVs wrong. These aren't people that got Tesla wrong. Kathy Wood saying Rivian was too expensive at 78. Gene Munster saying he's uncomfortable and that the valuation at 110 was one standard deviation above what he would call aggressive. They made their first truck deliveries just over, 2 months ago. And at the end of last month, the company produced something like 180 vehicles. And all of that said, and yesterday, we're talking about the third largest auto manufacturer on the planet, passing Volkswagen. And by the way, Volkswagen, they made nearly 7 million vehicles in the first 9 months with over $211 billion in revenue. So I think you put that together and you say you don't have to be a genius to say these things don't make sense. You just got to be crazy enough to stand in front of the train.
So Victor, I mean, if you want to short it, though, how A, dangerous can that be, and B, expensive is it? Very volatile stocks. It's not like puts are cheap relative to what you might be expecting.
No, definitely. I think, look, at Tastytrade, we always talk about trading in a manner, trading often in an risk-defined manner to the extent that you can. I think this was a very risk-defined trade looking out at the 105 puts. Normally, you don't buy puts.
Sorry to interrupt momentarily, President Biden is driving an electric Hummer as we speak in his tour of the GM store in Michigan, which we're going to play now whilst you continue your view on how to short Rivian. This was just moments ago, which is what the viewers will be able to see on their screens. Go for it, Victor.
No worries. Normally, you don't buy out of the money puts on something you're bearish on that's gone parabolic because the puts are going to be expensive. As the stock goes down, they take out the implied volatility or the premiums of those, and you're either not going to make money or not going to make as much as you expected. But that wasn't necessarily the case in Rivian yesterday. I think some of those out-of-the-money puts weren't trading as expensive as you might have expected. And I think you had an opportunity to go in. And now today, the question was, you take profits off the table or turn it into a riskless trade. I chose to turn it into a riskless trade. So if, Rivian continues to move lower, it's just effectively a free roll at this point.
But broadly speaking, Victor, how do you look at a company like Rivian, which at this point still has a relatively small float? A lot of people would say it's trading based on what its expected future value is, given that there isn't that much historical data to look to in order to figure out what the potential discounted cash flows would be in the future.
Yeah.
Is it risky to make any big bets surrounding a company like this in this current market environment?
Yeah, I think so, and that's why I emphasize that this is a relatively small percentage going towards this outlook. And then in general, look, I think you look at $140 billion worth of valuation, you say, what is this? There's probably a lot of people that wish they were on that Tesla train at 250, called it expensive at 500, called it expensive at 740, and even at 1200 had reservations of participating. So you go at $140 billion of valuation. How much is that is just regret of not being on the Tesla train the first time? And how much of that is hope that you're going to catch lightning in a bottle the second time? And I don't think hope or regret are a good reason to value something that has great prospects, don't get me wrong. It just seems like it got a little bit ahead of itself, and you're seeing the market reprice not only that, but Lucid and some other aspects of this market today. And I think that's a good thing, honestly.